morning everyone and welcome to this new video. Today we are concluding our discussion on business plan, building on the foundation we laid in the last week's video. I hope you like the topic and especially that you found it interesting. So let's pick up where we left off. Here is what you will see in this video. We conclude topics of professional business plan, mistakes to avoid, and who can write a business plan. But first of all, our intro. Last week we stopped about halfway through the second point, so let's pick up from there. Financial statements. The 5-year financial statements represent a crucial element of the business plan, as they allow you to assess the economic and financial sustainability of the project in the medium to long term. Section includes the main accounting documents and forecast analysis that provide a complete overview of the company's financial situation. We have the income statement. The forecast income statement provides an estimate of revenues, costs, and profit for the next 5 years. This document helps you analyze revenue based on sales estimates supported by the TAM-SAM-SOM and marketing plan. Operating costs, detail of production, marketing, human resources, and overhead costs. The EBITDA, earning before interest, taxes, and depreciation and amortization, indicator of operating profitability. Again, the EBIT, operating profit after depreciation, amortization, and provisions. And finally, the net profit, final result after taxes and interest. Then we have the balance sheet. Forward-looking balance sheet highlights the structure of the company's assets and liabilities, including for the asset, the current assets like cash, trade receivables, inventories, and non-current assets such as tangible and intangibles, investment in machinery, patents, software, and so on. Liabilities, short-term debts, receivables, short-term loans, and long-term debts, mortgages, bonds, equity. Then we have the cash flow statement. The forecast cash flow statement shows how the company expects to generate and use cash over the next 5 years. It includes operating cash flow, deriving from operating activities, net of changes in the working capital. Cash flow from investments, expenses for the purchase of tangible and intangible assets or disposal of assets. And then we have the financial cash flow, sources of financing such as equity and debt and their repayment. Again, in financial statement we have the analysis by ratios. Including an analysis by ratios provides investors with a clear understanding of the company's financial health. The main ratios are profitability ratios to measure the company's ability to generate income. They are, for example, operating ratio, net profit ratio, return on equity. Then we have the liquidity ratios to measure the financial health of the company. There are, for example, the net working capital, the asset test, or the cash ratio. The efficiency ratios that measure a company's ability to use its resources optimally to generate revenue. Evaluate aspects such as inventory management, the speed of collection of receivables, and thus turnover, providing a picture of operational productivity and management of company resources. Last, the solvency ratios. This measure a company's ability to meet its long-term financial obligations. They indicate the degree of capital and financial solidity, analyzing the ratio between debts and equity or between liabilities and total assets, and assess the sustainability of debt over time. They are, for example, the debt-to-equity ratio, the equity multiplier, and the interest expenses coverage ratio. So, well, these are the sections that cannot be missing in a business plan. Now it comes the section on mistakes to avoid. A well-structured business plan is the basis for presenting a project both to investors and shareholders. However, common mistakes can undermine its effectiveness and credibility. Here's a breakdown of the most critical errors to avoid, drawing signs from real-world case studies and expert analysis. First, superficiality in structure and detail. One of the most common mistakes is to treat essential in a generic or vague way. For example, market and competition analysis. An incomplete analysis doesn't quantify the market value or competitive positioning reduces the reliability of the business plan. Financial projections. They are often based on unvalidated assumptions without solid justification or supporting data. How to avoid it? Use quantitative data and reliable sources for each section. Detail everything from sales forecast to competitive advantage with verifiable information. Again, unclear goals and strategy. A business plan should clearly answer two questions. What is your mission and how do you intend to achieve it? Common errors include ambitious business goals but not supported by clear operational strategies. Lack of details on how to leverage specific resources or reach the target market. How to avoid it? Accurately describe the company's mission and link it to concrete, measurable operational strategies. Each statement must be supported by a clear plan of action. Inconsistency in numbers. Inconsistencies in financial data are a sign of unprofessional and discourage investors. The most common mistakes are overly optimistic projection not aligned with the market context, inaccurate calculation or calculation based on unrealistic assumptions such as miscalculated revenue or cost. How to avoid it? Make sure that all figures are consistent and that the assumptions behind the projections are realistic. Use industry benchmarks to validate data. Again, lack of a risk management strategy. Every business faces risks, but many business plans ignore or underestimate. Common errors include: do not consider fundamental risks such as market volatility or regulatory changes. Plans to mitigate identified risk. How to avoid it? Integrate analysis tools such as risk metric and pestle analysis to assess internal and external risk. Propose clear strategy to manage any unforeseen events. In this increasingly sustainability-conscious context, the lack of an ESG, environmental, social and governance approach can penalize the business plan. Typical mistakes are generic environment impact statements without specific metrics, lack of a plan to measure and communicate ESG results. How to avoid it? Propose concrete and measurable actions related to sustainability, include ESG objectives, integrate into operational and financial strategy. And again, general financing request. When applying for funding, it is crucial to justify how the funds will be used. The most common mistakes are funds request without a detailed breakdown, lack of correlation between funds requested and business goals. How to avoid it? Detail the use of funds, specifying the areas of investment, production, marketing, human resources, and so on, and link each expenses to the expected outcomes. The importance of accuracy and consistency. An incomplete or error-ridden business plan communicates a lack of preparation, discouraging investors and lenders. To avoid this, it is essential to structure the document in a detailed and logical way, use reliable data and sources, propose clear strategies and consistent financial plans. Well-done business plan not only attracts investors but also becomes a strategic guide for the company's success. And then the last chapter, who can write a business plan? A professional business plan is a complex document that requires multidisciplinary skills in economics, finance, marketing, and business strategy. For this reason, not everyone is able to draft one that is effective and convincing. Essentially, there are two categories of professionals who can write top-notch business plan. Chartered accountants. Chartered accountants are experienced professionals in tax, accounting, and financial matters. Thanks to their training, they have the necessary skills to analyze financial data, make economic projections, and understand current legislation. However, it is important to note that not all accountants write business plans. Some may not have the time or resources to devote themselves to writing an in-depth business plan, especially if they don't have the necessary database or market analyzing tools. Specialization. Some accountants focus more on tax and accounting advice rather than strategic planning or marketing. So as a tip, if you want to get help from an accountant, make sure they have experience writing business plans. If not, you can ask them to recommend a specialized professional. My firm collaborates with about 20 accountants throughout Italy for whom we write business plans for their clients, combining tax and strategic skills. Business consulting firms. Business consulting firms or studios like mine specialize in strategic planning and business growth. Our team is made up of business graduates with various specializations, including marketing, finance, and business strategy. Here are some benefits. Multidisciplinary approach. We offer an integrated view that includes market analysis, marketing strategies, financial projection, and risk assessment. Specific experience. We are used to working with startups and small and medium enterprises for different sectors, understand the peculiarity and challenges of each. There are as well other pros like law firms specializing in commercial law that can draw up an excellent business plan, especially when complex legal aspects are involved, such as mergers, acquisition, intellectual property protection. However, there are some limitations. Not all lawyers have an in-depth expertise in economics or finance. Their training is primarily legal, so they may lack experience in financial planning or marketing. So when to consider them? If your project requires a strong legal component, it may be helpful to involve a law firm in a collaboration with business or financial advisors. And now, who avoid? First, low-cost online solutions. Be wary of services that offer business plans at a bargaining price. These are often standardized models that do not consider the specificities of your company and your market. Overconfidence in artificial intelligence. While AI tools can assist you in gathering information or generating ideas, they cannot replace the experience and professional judgment required to draft an effective and personalized business plan. And then, last but not least, the gurus of social network. Another category to stay away from is that the so-called social media gurus, people who provide themselves as experts in everything without academic training or concrete experience in the field. People often promise extraordinary results, but they do not even possess the basic skills to calculate a compounding capitalization or analyze a market with objective criteria. Rely on these figures, risk wasting time and money, as well as compromising the credibility of your project. The business plan is not just a series of beautiful words or catchy slogans, but a strategic document that requires specific and in-depth skills in economics, finance, and marketing. So, as a conclusion for this video, we have seen together all the fundamental aspects that a professional business plan must include. from the protection of information with a non-disclosure agreement to the description of the company, passing through the analysis of the market and the competitive context, the calculation of the TAM, SAM, SUM, up to financial planning and 4-year projection. Each element is essential to present a credible and convincing project. We also talked about key risk management tools such as the risk matrix and PESTEL analysis, and explore how to best use investor funds and monitor the company's cost structure. These aspects, if correctly addressed, can make the difference between a rough business plan and one able of attracting investors and financing the growth of your company. Chapter that I consider equally important is that of mistakes to avoid, such as superficiality, inconsistency in numbers, or relying on low-cost solutions and unqualified figures, such as social media gurus. Finally, we talk about who can write a professional business plan. Whether you rely on an accountant, a business consulting firm like mine, or a multidisciplinary team, my advice is to carefully choose the right professional. Most of all, be wary of solutions that are too simple or standardized. Each business plan must be unique and reflect the specificities of your project and your market. If you have any doubts or need support, my studio is available to accompany you on this journey. So, thank you for watching this video. If it was useful to you, leave a comment, subscribe to the channel, activate the bell so as to not miss the next content dedicated to strategic planning and corporate finance. See you next week.